Hello friends, I'm Rocky Outcrop. This is an Ethereum Technical Analysis video. Thank you so much for joining me today. I really hope you hit that likes button and that subscribe button and leave a comment down below telling me that you watched it. And well, you know, you've seen YouTube before, so you know what I'm going to ask, and I really appreciate it massively, absolutely, completely. So what have we got here today to look at? Well, we're still in this period here where we actually sit in another higher low compared to here, and this low here is higher than this one, and this low is higher than this one. So we've got this sort of so-called kind of upward trend, but this high here is lower than this high. So the question really is, have we been consolidating or even trending towards the downside slightly since the 20th of May, or will we go on up and put in a higher high than before? If we do that, then as you can see with this green line here, we could even be breaking out of a pattern, so to speak, depending on what way you look at it, whether that's this symmetrical triangle as formed with part of this upward sloping magnolia coloured line here and this downward sloping green line, or indeed if it's this sort of descending broadening wedge idea. Now with the descending broadening wedge, there's only really the one sort of touch after your initial point, and obviously it's highly subjective where you put it in at. So, you know, like for instance, there we go, that's changed fairly dramatically there, and it took nothing to do that. So, you know, we're going to have to be a bit more patient with this one to figure out if that's the case. Just so you know, as well, this upward sloping trend line that I have going along here, which it looks like it's kind of broken out of at the minute, isn't really drawn in with any great deal of precision either, and it could probably be moved down or so to accommodate this particular bit of price action there fairly easily, as you can see, you know, just as with a slight adjustment there for us. Okay, so we're still in this area here, and the question really for us is, will we see sort of fake outs or breakouts from this? If we see fake outs, we could be seeing the prices going down to the 194 area again, as we have done several times recently, and what that area happens to be is where the 236 Fibonacci retracement, which goes from this low to this high, comes in at, and that would create a valid Fibonacci retracement, and we could then be looking down towards the bottom end where this descending broadening wedge is coming in at again for a turnaround at the 382 in around that 173 area. Now, of course, there's other things along the way. For instance, there's this green line that you can see running along the charts here. Pardon me. And if I just keep going along, you can see this is the 382 Fibonacci retracement on from the swing highs down to the high in June 2019 down to the low in March 2020. So, you know, we'd want to be staying above that if possible, and going down below that, you could even be looking at coming down to the next area at this 236 Fibonacci, which comes in at 155 or so. So we have a couple of lines in here, and we know that's where those are. But we know that there's this. I'll just double check this is set to. So there's a couple of questions here. One of them is if this is set to 50 and 200, you know, using the Golden Cross sort of philosophy from the traditional world, which is traded Monday to Friday, on this market which is open 24/7, then you could use 50 and 200 and see there was a golden cross back here on the 13th of May, and perhaps we just come down and retest, you know, at 191 or so where the 50 moving average is, or over the next couple of days that will move up a bit more, and we could be testing it in and around these areas as part of like a fake out of a breakout from this symmetrical triangle concept, for instance. Or indeed we could go all the way down and test the 200, you know, and that would be the measured move off the back of this thing. Or it could be that that if they were to use the same concept from the traditional world in terms of how long a period of time that is, as opposed to how many trading sessions that is, then we can look at 70 and 280 and be we can quickly see that there hasn't actually been that golden cross quite yet. Now, as a result of the price action over here, where it's up high, is now more than 70 bars back, we actually see this curve, which is fairly distinct slope towards the upside on the 50 simple moving average, and there will be that more traditional world cross coming in here in the next, you know, potentially by June or so. And again, you know, there could be volatility that goes along hand in hand with that sort of of concept. Now these things aren't necessarily all what people are looking for. It's just, it kind of just goes towards the general idea of the trend, you know, and that this is an area where we, when these things cross over, as opposed to necessarily being the keys to the kingdom, what they're handing you there is more of a sort of a quick, easy way of saying, well, look, over the last 50 days, on average, the price has been higher than it has been on average over the last 200 days, or in this case, over the last 70 days, it's been higher than it has been over the last 280 days, and that's the bullish aspect of it. And you can look at the slope on these things and whatnot. Anyway, we know the targets for us for the downside if we have a fake out perhaps of this thing. And I'll draw in the measured move, sure, why not, while we're at it. Let's just say it was around about here. You know, if we had a fake out, it could take us down to these areas, or indeed we could see the prices come all the way down to where we find this 70 simple moving average at. Now if I just change these back again now to 50 and 200, and look, you can see that's also where the 200 simple happens to be at as well on this one. And of course we know as well that the 177 is an area of interest, and all the way down as far as that the 160s area where we could have this where we could potentially see some sort of turnaround. And then after that, think that this is a real descending broadening wedge. Of course, it's not a real one at the minute, it's a speculative one, and we've got it on here to give us an idea about what could happen if things were to not go in the bullish scenario way. Now, of course, the bullish scenario is that first off, the prices come up towards that 215 area, and then afterwards go up above previous highs here and go up towards 220, and that would be good to see happen. And if we zoom out to the left, you can see that there's this area in and around here where there was a great deal of price action, relatively speaking, and you can see the VPVR kicks in again in terms of the volume profile here in around that area. So opens and closes above, you know, all of this really, looking up towards that $230 for opens and closes really, so that we can, where this horizontal white serrated line is, so that we can kind of think, right, we're above this chunk of price action here, and we're maybe, you know, going to break past some key areas. And if you see the VPVR, it drops right off all the way up again to 250. So that's your bullish case scenario. And as well, if I take this measured move and stick it in here, then that takes us up to this sort of into this no man's land territory, where we can look over to the left and say, you know, look, we're coming up and challenging this particular sort of previous peak. And that's going to do us for today. In general, just remember that that we still see that the volume is continuing to diminish, and in general, in terms of this price action, remember that we still see that it is just continuing to do this process of higher lows at the same time as this other process of lower highs, and that's just consolidation in this general area, and that's what we're looking at until such times as things change. Thank you so much for tuning in. I'm not a financial advisor. This has not been financial advice. I hope that I've managed to succeed at speaking slower in today's episode. I'm trying really, really hard to do that. So yeah, thank you so much for tuning in. I really appreciate it. I'll catch you in the next episode. Oh, incidentally, the reason I didn't look for divergence or anything is because we're consolidating here. Even this high or this low here is higher than this previous low, and this high, which is, you know, non-existent currently, really is lower than this previous one. We really are just consolidating. So I'll just skip that altogether. If you want to see the moving averages, you can see that there's nothing particularly special about them, other than the fact that, you know, maybe we've been supported by the neutral line, but then again, maybe we've tested it 3 or 4 times and we're going to break down, and maybe you could say that there's some sort of head and shoulders event here occurring potentially on the RSI, which could then take us down the way. But then equally, of course, you know, like that's a story for another day. Thank you so much for tuning in. I'll catch you next time.